Hello again, fellow beach bum traders. Thank you for joining us for part one of our weekly trading game plan for the last week of March, March 28th through April 1st. And hopefully in this weekly trading game plan this week, we will help you survive and thrive in the March madness in the markets. So let's get started. Okay, firstly, if we take a quick look at how the markets ended up on Friday, March 25th, I'm on the home page of FinBiz. You can find our affiliate link for FinBiz as always in the description box below. We could see the indices kind of struggled, oscillated back and forth throughout the day, and the Dow and S&P finished mildly positive, and the Nasdaq mildly negative. But we could see there was more decliners than advancers, more lows than highs, and there's still a majority are near the SMA 50, and a majority are below the SMA 200. So under the covers, still have a lot of weakness, and we'll see how that we can play that, strategize to make money in this current market. So if we scroll through the news, we can see inflation, Russia war, etc. Treasury yields have been climbing. Treasury prices have been dropping, and there's talk of the yield curve inverting, etc. So we'll talk about what does that mean? How do we strategize to make money in this market? Again, we saw both oil and natural gas push to some highs recently, and then kind of oscillate near those highs right now. We see gold has kind of dropped below that 2,000 line and is pushing up again. And again, we could see the Treasury, the bonds, have been pushing up towards that 2.8 limit that we're talking about for the Fed interest rate hike. So we'll look at the futures, etc., the indices, and then again, we hope you'll stick around to the end of the video. We'll share with you a strategy that we're using to make money in this mad March market. So stick around. Okay, if we quickly look at the weekly chart for the indices in FinBiz, we can see the SPY for the S&P 500 is kind of right at the midpoint of its 200-day moving average and its 50-day moving average. So what we're going to see in all of these indexes is they're essentially testing their moving averages. They're testing their 50-day and 200-day moving averages. And like we talked about last week, we're waiting to see a definitive breakout. There's no clear direction yet in the market. And therefore, we're still below most of the moving averages, and so therefore, we would still have hypothesis that we're in a downward bearish market. We're waiting to see a definitive breakout of those moving averages on the indices, which would cause us then to, view this market as bullish. If these breakouts fail, then we're going to continue to view the markets as bearish. So again, we're going to see that in all the indices. They're testing their moving averages. Until we see a definitive breakout of those moving averages, we should assume that we're still in a downward trending bearish market. And so we should have our mindset and be viewing our trades in that perspective. So if we look at the Dow, or we'll look at the Qs, the Nasdaq, again, we see the same thing. We're going to see this in all the indices. They're testing their moving averages. We're not seeing a definitive breakout. Here's the Dow, same thing. We look at the Russell 2000, the IWM. It hasn't even achieved testing its moving averages, so it's lagging. And then if we look at the VIX, we can see that after the Fed meeting, we didn't get any surprises at the last Fed meeting. We only got a 0.25 interest rate hike, which is what we expected. No news on the quantitative tightening yet, and so the VIX has been steadily decreasing. So it's retracing to its mean. We would expect, unless there's some global event that causes it to spike or some unforeseen news, we would expect the VIX to continue to retrace at least to this 20 level and possibly all the way down to the 18 or 16 level. So we're going to be watching for that bottom in the VIX, and then we do have the next FOMC meeting. We'll talk about our strategy going into that, how to potentially play volatility both in the meantime and going into that next meeting. Okay, let's take a quick look at how the various sectors, industries, and countries performed last week. And you'll see in the description box below we have several videos that we've recently done on how to use this FinViz Groups tab in more detail. So please take a look at those and how to find the stocks in the hot industries that we identify herein. So again, please take a look at those videos in the description box below. So I'm on the Groups tab of FinViz. I've got the default sector, which is the various sectors. We can see on Friday, energy, utilities, real estate, financial outperformed. For the week, again, we have a recurring theme: energy, basic materials, utilities. We had some recovery in communication services, but again, the main monthly trend for March has been energy, basic materials, utilities. We also see industrial starting to take a positive position there. So again, going forward, the theme is energy, basic materials. Really is the major theme. And again, in those other videos, you can see how you can drill down in each of these areas to identify the hot stocks in each of those areas. So let's take a look at the industrial view. Okay, if I select industry in that group option, we can see the various industries' performance over those time frames. So we can see on Friday, oil and natural gas were the top performers. We scroll down, we can see for the week, again, all energy sectors, thermal coal, oil and gas, etc. We see also agricultural. You'll hear that that's a theme that's upcoming, and we'll see that in the futures, that various agricultural products are running. And then for the month, again, we'll see it's energy, agricultural products, and then we also have materials, steel, uranium. We also see solar as a potential theme. So again, those are all the top performing industries right now, and so those should be the areas that we're looking for hot stocks. Okay, if we also take a look at the market performance on Friday the 25th in the Markets tab on Webull. Again, I'm on the online browser version of Webull, and we have a previous video that goes in more detail about how to use this Markets tab. And right now you can get, as of the filming of this video, right now Webull's offering 5 free stocks when you open and fund an account at Webull, and you can find our affiliate link to Webull in the description box below and also on our homepage, etc. So if we take a quick look, again, I like this histogram. We can see kind of the dichotomy in this histogram that most of the stocks on Friday were either slightly advancing or slightly declining. And then we have some trailing off in both directions. So again, quite a tug of war, as we've talked about the past couple weeks. If we look at the inflows, again, we see a lot of outflow out of the NASDAQ on Friday and a pretty steady inflow in the New York Stock Exchange on Friday. So I want to just real quickly look at the best performing industries and the best performing ETFs on Friday. So it'll kind of give us an idea of what the theme going into Monday is. We can see, okay, integrated hardware, software, computer was pretty negative. Again, we're going to see energy. We saw that theme, so energy is going to be pretty positive. Utilities, we saw that theme in the sectors in FinViz. Conglomerate, consumer goods, that's interesting. We're going to talk about that in our strategies as computer discretionary or consumer discretionary versus consumer necessities as part of our strategy. So we see beverages as positive, utilities can be positive. Personal goods is kind of neutral. Containers packaging positive, REITs positive, and we've talked about that the past couple weeks. And again, as you know, we've had positions in some REITs, made some money in some REITs. So if we look at the trend of the indices, Dow up, S&P up, VIX down, again it's reverting, and the Russell up. Industries, we should see what similar to what we saw in FinBiz, utilities. Okay, we saw this recovery in communication, industrials, neutral, healthcare, energy, very positive. So consumer cyclical was negative, technology negative, materials positive, consumer defensive. Again, this is part of the strategy we'll talk about at the end. Is consumer cyclical versus consumer defensive and consumer discretionary. Okay, we see real estate's positive and finance is positive. So commodities, we can see, okay, precious metals, aluminum, and again, materials. This is a major focus right now with the war on Russia's war on Ukraine, causing deficiencies in several of these materials coming out of Ukraine, etc. Broad basket, commodities, okay. Softs, that's cotton. Cotton made a crazy run. And I've been looking for a way, an ETF to short cotton. I haven't found one yet. We'll talk about that in the futures in a minute. And bonds have been a major focus because the bond prices have been dropping precipitously, yields boosting up. Again, they've got to achieve a yield that's greater than the Fed's interest rate for them to be attractive. So we've been talking about that for months and months, and finally it's caught on. So we saw the yields run up, prices run down. So, and now, they're talking about the yield curve inverting, etc., and what all that means. So we see short term was positive, inflation positive, and then we're going to talk about Forex as well. We're going to start talking about Forex and globalization, etc., in our strategy. So I hope that all helps, and we'll continue. Okay, let's look at some of the economic data results we got from last week, and then let's look at the economic calendar for next week. And if you haven't already seen this, we're now posting real-time economic data results, related news, articles, etc. in the Surf the Markets channel in our Beach Bum Trading Community Discord. And you can find links to our Discord in the description box below, in the link section at the bottom of the About page on our YouTube channel, on our homepage, beachbumtrading.com, etc. So if you're not already in our Beach Bum Trading Community Discord, we'll invite you to join us. And as you can see, what we do is, as this data comes out, we post it in the Surf the Markets channel there. So we hope that also helps. So. And you can see there's a link to the economic calendar in investing.com. So if we jump over there and we look at some of my commentary on some of the results, and we'll quickly scroll through. It wasn't terribly eventful last week, although Thursday we got jobless claims that was better than expected, and you'll see this article is also posted in the Discord with this data. So that was positive. And then on Friday, we got that consumer sentiment data was worse than expected, and it was an 11-year low. So consumer sentiment is negative, and we'll see how to strategize based on that. What does that mean in a minute? And then we'll also see that the U.S. Baker Hughes oil rig count is the highest since March of 2020, which was pre-pandemic. So the rig count is the highest since pre-pandemic. So you hear all these discussions, political discussions about, okay, oil companies need to be pumping more oil. Well, they are. This has been steadily increasing, kind of quietly increasing for quite a while. We've been pointing this out for quite a while. It's just been kind of silently increasing, and people haven't noticed. So the oil companies have been preparing and are starting to pump more oil. But again, you don't want to announce that too much because it causes the price to go down, right? But yeah, they are capitalizing on these high prices. So, and again, if we just scroll through, one of the nice things about this economic calendar is you can see the greens and reds real quickly uh, in terms of, okay, what was positive news, what was negative news. So, we see home sales was negative there. Um, and then jobless claims data on Thursday was positive, and then on Friday we could see the sentiment was negative. So again, that's a nice thing about this economic calendar on investing.com is you can quickly scroll through and see the reds and greens. And if I can figure out how to translate that in the Discord posting, I'll translate the colors. I just haven't figured that out yet. But again, you'll find this data. We try to post it as quickly as possible once the news comes out, so you can get that information and react accordingly. So now, if we quickly look at what is coming for next week, we can flip the tab to next week, and we can see a pretty standard week. Monday, we get Treasury bill auctions, more FOMC people talking. So far, their talks haven't rattled the market too bad. Powell talked again, and that caused a little bit of volatility. And then we get jolts for job data, and then GDP data. That might be somewhat interesting if we hear a slowdown in the markets. There's now talk of recession, so if we see GDP data supporting a recession, that may be of some concern on Wednesday. We've got an OPEC meeting on Thursday, so this may impact oil prices if OPEC finally does decide to increase production. That may be a factor, so keep a listen to the OPEC meeting on Thursday in terms of oil prices. So then we get jobless claims data again. So far that was positive this past week. And then Friday, manufacturing payroll, so get payroll data, jobs data on Friday, unemployment, etc. So again, there's some important data. We need to listen to that and see if there's anything that is dramatically positive or negative and react accordingly. So hope that all helps. Okay, let's take a quick look at the futures in FinBiz. So I'm on the futures tab. In FinBiz, we can see all the indices. Again, they're kind of indeterminate whether they're going to break out, turn up, or break down and continue in a downward trend. We can see none of them have really achieved their recent highs. Again, so very, very indeterminate. And we're waiting to see some definitive direction in the indices. Same thing with the Russell. We can see the retracement in the VIX. And again, we're expecting it to continue to retrace down to that 20, maybe 18, 16 level. And again, our strategy going forward with the VIX, we'll talk about this in more detail, but we've got the next FOMC meeting where we expect, we hope we'll hear the quantitative tightening plan, and now there's talk, a lot of the Fed officials are talking that they need to do a 50-point interest rate hike in their next meeting in April. So again, it'd be nice if we can get a long position in the VIX using UVXY going into that next FOMC meeting and potentially catch at least a little spike on that news. So then we can see oil, natural gas, etc. They've been running up, may have peaked, maybe turning down. We'll see. And again, we'll talk about our strategy in a minute of playing oil and natural gas. So we can see that all the oil and natural gas. We see natural gas kind of made an irrational run up. Really, the only news was that Europe's not going to buy natural gas from Russia, so the U.S. is going to help support natural gas going to Europe. So not really that big of news. It was kind of expected, but it did cause a run up in natural gas. And again, in a minute, we'll talk about our strategy for how we're playing that run up in natural gas. Gold looks like it might be pushing back to that 2000 level, but it's pretty stable. Silver was actually outperforming gold earlier this week. We see platinum and palladium have turned down. Unfortunately, I don't have an ETF to short platinum and palladium, but if you can short individual stocks, we can see those guys both turned down recently. Uh, Also, there's some crazy activity in livestock. Live cattle, it was declining, and we saw this irrational jump in lean hogs. And there is an ETF called COW, so COW, to long live cattle and lean hogs, but I have yet to find one to be able to short. I'd love to be able to short something that looks like that, but I haven't found ETF to do that again. If you have the opportunity to play individual stocks in that category, to short that, that may be a great opportunity. Uh, Again, we see these crazy runs in wheat and cotton, and again, I don't have ETFs right now to be able to short these things, but again, opportunities to short using individual stocks if you have the capability to do that. And then we see the treasuries. And in a moment, we'll talk about a strategy with the treasuries. We can see just the precipitous drops. It looked like there might have been a stable bottom there, and then on Friday we saw another precipitous drop. So we'll talk about more of our strategies in that. And then an interesting thing I saw this week was some of the behavior in the foreign currencies, the Forex, and in particular, if you look at this correlation with the U.S. dollar going up and the Japanese yen going down, I thought, oh, there's an opportunity there. And we saw a real crazy run in the Canadian dollar. It's got me thinking about getting into Forex. This type of behavior, that correlation looks like an opportunity to me. That looks like an opportunity. So I'm just kind of starting to think about getting into Forex and taking advantage of those opportunities, and I will be asking for your opinions in those areas. So let's continue. Okay, let's talk about some trends and strategies that we want to use in terms of picking our stocks for our watch list going into next week. The first one, as we just talked about, is this run up in natural gas. And my opinion is that the demand for natural gas, although there's the issues with Ukraine, Europe, etc., I believe the demand will decrease. In fact, I heard on CNBC that typically this is their slow period. So really this demand, this price increase is being driven by the issues in Europe with the Ukraine and Russia. And I expect that to decrease and revert at least back down to this recent low level and possibly down here where it bottomed a couple times before. So we're shorting natural gas using cold. We'll talk about a detailed strategy in part 2, but again, when we saw this exuberant run up to this peak of resistance point, we're shorting natural gas using cold. Again, we just looked at the bond prices. It looked like they might have been bottoming, although on Friday they then broke down further. So we're looking for a bottom. If it achieves a bottom before the next FOMC meeting, particularly with the yields around that 2.8, 2.9 level, which is what we expect the Fed interest rate the terminal rate to achieve. We might look for that bottom, but again, once they start their quantitative tightening and start selling, that will probably cause a further decline in bond prices. So we're watching, kind of keeping an eye on TMF and TYD to see if that achieves that bottom. So we'll be keeping an eye on that, but it continues to break down and decline. So another important point I wanted to discuss, and we can think about this and talk about it further in our Discord, in our Facebook group, etc., is I see a mega trend of retraction from globalization. We've got, and I believe, and again, I won't babble about that right now, we can talk about it further, but I don't think just the Russia thing was the start of it. I would go as far back as Brexit and what's going on in the U.S. Countries are retracting inwardly and reducing globalization, dependence on globalization. We saw supply chain issues, COVID, Russia, Ukraine, and I think people are starting to figure out that being dependent on other countries is a risk. And what we want to do is think about, now that they're realizing that, what impact is that going to have on companies if you have a retraction from globalization? And a company has saturated its local market. So if you've sold everything you can in the U.S. and you're not going to be able to go globally, let's say you can't go to Russia, okay, now you can't. That market's closed now. What happens if China closes and you can't expand into China? What impact is that going to have on those companies? So again, look at your portfolio, look at your watch list, start thinking about things like that. Is if they've saturated their market, how are they going to expand and continue to grow? And that particularly would impact a growth company, right? So again, we could talk about this further. I think this is a mega trend. It's going to go on for a long time. But if we start thinking about it earlier, we can minimize the risk and take advantage of the opportunities in that area. So another area I want to talk about further, but I just want to bring it up here, is the fact that we have high inflation, we have increasing interest rates, and that is, over time, it's going to start to decrease consumers' discretionary funds. They're going to have to be spending more money on gas, food, servicing debt, etc. And so they're going to have fewer funds, less money to spend on discretionary things, luxury goods, things they don't, non-necessity. So if their spending increases on necessity, then what sectors are going to be dependent on whatever they have left to spend discretionarily, and what impact is that going to have? So again, we can discuss that further in the Discord and our Facebook group, in the comments to this video. I'll probably post this as a question in the comments so we can talk about it, but start to think about, what are going to be the impacts when the consumer has less money at their discretion to spend, because all their money is being spent on food, gas, rent, mortgage, and other basic necessities. So again, we talked about, the impact on the consumer discretionary sector versus the consumer cyclical, etc. So think about this again in terms of your portfolio, the stocks you're watching. Expect a decrease in consumer discretionary funds and what impact that's going to have. Now, as promised earlier in this video, a strategy that we've started to really leverage to make money in this March Madness type of market, and as well as just going forward, is even, if the market's declining, if we have a losing position, a way that we could just repeatedly make money is we're selling covered calls against our positions on up days. So when that particular ticker stock is going up, the value, the price of that covered call that we can sell on that day is increased. So we sell it when the stock's going up, we sell the covered calls, and then if that stock comes back down, then we buy it back at a cheaper price, and we get to keep the difference in the premiums as profit. And so we just keep repeating this. So if you have a stock that's, oscillating in some kind of range, and it goes up one day and down the next, you sell the covered call on the day it goes up, you buy it back on the day it goes down, you keep the profit, you do it again, rinse and repeat. So we're making some nice money doing this. We recently did this a couple times on SOX, which is the short ETF on semiconductors. It's been flip-flopping, oscillating back and forth. So again, on days that it's up, we sell the covered calls. On days it goes down, we buy them back and keep the profit, and then we rinse and repeat, do it again, and keep the profit. So again, a strategy, if you are able to do options, sell covered calls in your accounts, is something to think about. It's a way, again, just to repeatedly make money in any kind of market, because on any given day there's probably something that's going up and another one that you've sold that's coming down. So if you have questions about this strategy, I believe we'll probably do a video that details the strategy more. I know we have some about selling covered calls. I'll probably put the link to the piece of selling covered calls in the description box below. So we hope this all helps. A lot of data. We'll use all this data picking our stocks, so we hope you'll come back tomorrow for part 2. as to what stocks we're going to put on our watch list for next week to potentially buy next week for the 28th through March 1st. And again, let us know what you think of all this in the comments below. Join our Discord. Let's talk about it. We'll talk about the questions we discussed in this part, etc. So we hope you like this, and if you're not already a member of our Beach Bum Trading YouTube community, we'll hope you'll choose to subscribe, share this with your fellow traders around the world. Let's build up our community. Let's have these discussions. Let's talk about how we can help each other make money even in the March Madness in the market. So thank you for joining us again. Thank you for your time. I appreciate it. And we look forward to seeing you again tomorrow.
The content of this video was produced by Beach Bum Trading. We hope you will choose to also join us in the Beach Bum Trading community and subscribe to our YouTube channel. Visit us at our homepage at beachbumtrading.com, the bum without the U. Similarly on Twitter, Beach Bum Trading, bum without the U. On Facebook and in our Beach Bum Trading Facebook group. Please follow us on Pinterest and on Instagram. All of the links to our social media sites will be included in the description box below, and we hope you will choose to subscribe to our Beach Bum Trading YouTube channel and follow us on social media. Thank you. We also cordially want to invite you to our new Beach Bum Trading Community Discord server, where we can have discussions on all topics related to trading, success in trading, investing, etc. You can see alerts when we make trades, changes to our watch lists, etc. So again, please join us in the new Beach Bum Trading Community Discord server. You should be able to find a link in the description box below. You can also find a link in the social media category on our webpage, beachbumtrading.com, without the bum without the U, and also in the link section on the About page of our YouTube channel, etc. So again, we look forward to seeing you in the Beach Bum Trading Community Discord server soon. Wave and say hello. We hope that you like our weekly game plan for the trading week for this week. Thank you for watching the video to the end. If you found this helpful, we hope that you will choose to subscribe to our Beach Bum Trading YouTube channel, and please click the bell icon below to automatically be notified whenever we publish a new video. Please also share this with your fellow traders and friends via the share button included below. And let us know if you found our weekly game plans helpful in the comments included below. And let us know how we can improve. What would you like to see more, less of, etc. Thank you again for watching. Good luck and have a great trading week. Bye. If you like this video, we hope you will choose to subscribe to our YouTube channel by clicking on the box in the upper left-hand corner. You can watch another video like this by clicking on the box in the lower right-hand corner. And we have a whole playlist of videos like this that you can access via the box in the upper right-hand corner. Our latest video is available in the box in the lower left-hand corner. We hope you like this and have a great day.